So far, in this series of videos on the quantum currency matrix, we've tried to explain the underlying methodology and why we developed the indicator. In the second video, we looked at one of the most powerful concepts and applications of the currency matrix in helping to identify currency flows, and in particular, whether these are universal or not. And the reason here is simple. If the flow for a currency is reflected across the related currency pairs unanimously, then the risk on a trade is low. Conversely, if the flow is not universal across the pairs, then the risk on any trade in that currency is that much higher. Now in this video, I want to focus on one particular aspect of the currency matrix, and that's in looking at the extremes, and in particular to explain why, what they tell us, and how to interpret the information to help us in our trading decisions. So let me try and answer these questions now. Why do we look at the extremes first? And to answer this question, the simplest example is to consider the currency strength indicator. If you've ever used such an indicator, then you'll know that currencies move from overbought to oversold and back again in all time frames. And the same principle applies here when we consider the currency matrix. The difference here, of course, is that we are now considering currency pairs rather than the individual currencies themselves. Nevertheless, the same principles apply in that currency pairs will reflect strength or weakness, and ultimately will reverse from the extremes on the ladder, either from spot 1 or spot 28. But remember, currencies and currency pairs can stay overbought or oversold for extended periods. They will reverse at some point, and the timing of such reversal points is then confirmed by close technical analysis of the charts, coupled with the fundamental and relational aspects of market behaviour. So that's the first point, and the primary reason we consider the extremes, as these represent potential reversal points for a currency pair. Now, leading on from this, when we consider extremes, it's not simply those currencies at the very top or very bottom of the ladder that are important. Equally, those in positions 1 to 4 and 25 to 28 are just as important, as this will help to validate the strength or weakness in the pairs at the extremes. And by this, I mean the universal flows we considered in an earlier video. If all the currency flows are suggesting strength or weakness for a particular currency, which is then one of the currency pairs under consideration, then this is helping to validate the potential reversal opportunity given the strong selling or buying across the market. If a currency pair at an extreme is not validated in this way, then this may be an isolated pair lacking broad market sentiment and therefore a higher risk proposition. In other words, clusters of currency pairs at the extremes show universal strength or weakness, and we can then consider the charts for potential reversal opportunities in due course. Now, the next issue concerns the numbers themselves. And here it's all about the relative nature of one number to another. As you will see as we move up the time frames, the numbers at both extremes increase from low to relatively high in the slower time frames. The relationship between the numbers across the time frames is not important. What is important is the number within the time frame itself, and in particular with regard to two aspects. First, what has gone before, and second, the relationship between the most positive number in position 1 and the most negative number in position 28. Let's consider the first of these when considering a time frame. Suppose, for example, we are considering the 1-minute currency matrix, and over the past week we've seen a maximum of +10 and a minimum of -11. This then gives us a yardstick by which to measure the current sentiment and consequent strength. Suppose that position 1 has a reading of 6. Then we know that the pair has the potential to move much higher. It may not, of course, there is never any guarantee. But in having a yardstick, it puts the extreme into context. In other words, the possibility for further strength developing, or at the other end of the ladder, further weakness. This is all about context and giving us a frame of reference, if you like. Reversals will come from all levels on the extremes, as this then depends on the strength of any move, which in turn will also be reflected in the universal flows across the related currencies, which we talked about earlier. So this will help to put the extreme reading into context and provide a guide to either further development of the move or the potential for a reversal in due course. Now the second point concerns the relationship between the extremes. And again, this is about the relative nature of the two figures. And by this I mean the divergence between the two. In general, the two numbers should be relatively equal in terms of size, ignoring the fact that one is positive and the other negative. Let's look at an example. Suppose that in one time frame we have +30 in position 1 and -20 in position 28. Here we have some divergence, as the two numbers should be relatively close in size to one another. In this case, 20 is quite a long way away from 30, and therefore we might reasonably expect that the negative number move closer towards the size of the positive number and close the gap, if you like, moving from -20 to -30. In other words, this is revealing some weakness in the bearish sentiment, which may catch up in due course and signalling two things. First, and perhaps most importantly, a signal not to jump into the market looking for a reversal too early. And second, that the bearish sentiment has some way to go, with a potential opportunity of trading the tail end of a strong trend. Third, this also reveals momentum, which is stronger in one extreme and weaker in the other, which will then be reflected on the charts. Finally, and perhaps this may sound an obvious point, but in focusing on the extremes, this also sets the parameters when we are considering currency pairs in mid-table. For example, if the pair we are considering has some distance to travel before it reaches an extreme, then just like the currency strength indicator, this is signalling a pair that may well be on the move, on its journey, and moving from one extreme to another, with the extremes then providing the context for the extent of any further moves. So that's a short video on the extremes, which can be viewed in several different ways: confirming global flows, defining regions, providing context for further moves both at the extremes and for those currency pairs mid-table, and finally giving a sense of momentum through the number associated with the extreme. Now in the next video we're going to look at the quantum currency matrix in multiple time frames. So thanks for watching and see you again soon.